Traders, and welcome to this new daily market update. Today is May the 5th, and we are going to have a look at silver. Okay, so let's get going. I just want to say that I'm different from the other, from the other YouTubers, because I'm not a YouTuber. I am a trader. I trade, every day, and I try to find, the best opportunities for myself. And then what I decided to do after 4 years of trading live, and 4 years where I spent almost 2 years trying to become profitable, and right now I'm able to make a living trading. But of course, like everyone else, I need other sources of revenues, because I'm not making much with trading. Why? Because I don't have a bigger enough account. So I need to invest in my account, in my trading account, and I am confident that I can invest in my trading account. So of course this is all talk, etc. But what I want to say here is that I am trading live, and I like trading, and I love trading. I am an engineer by profession, but what I liked most about trading when I got started is that you can really be confronted to the best in the world just by you just need an internet connection and be at home and be able to make money. Just you can start by just doing it as a part-time job, because right now with the crisis, etc., maybe you just need a part-time job. You just need something that can that can generate some revenue for you. This is how I got started. Of course, during the first year where I got started, I started to make some calculations. I started to use some Excel sheets saying this year I'm going to make $300,000, $200,000, etc., etc. I started seeing millions. And of course, as soon as you get used to trading, as soon as you understand that you shouldn't be using high leverage, as soon as you understand that you can make maybe that money, but you can make that money in the long run. And I understand that. And that's why when I'm showing you something about any pair, etc., I'm not showing you risk. I'm not a risk. I'm not someone that loves risk more than. I'm not a risk lover. I like trading. Why? Because it can be consistent. It can be consistent. Everyone that is telling you that you can't be consistent are wrong, because it's 3%. Of course, only 3% will make it. But how many make it opening a new business or starting a new business? How many make it at med school or whatever? How many become a surgeon? How many become a big successful lawyer or whatever, or what, or you can use this you can use this analogy with lots of different professions. So you need time, and you need to get used to trading before you can become successful. And it takes time. It takes time. So let's get started. Anyways, so if you are new to this channel, I do 5 videos per day. I do them. I do them all for free. They're free analysis of different pairs. I do 5 different pairs per day, including weekends. This is the only channel on the internet that does 5 videos per day consistently and every day, and for free, and I mean consciously, because of course you can find brokers doing it, because they have lots of they have lots of analysts, etc., but they are just doing their job. I'm doing it every day. They are just doing their analyst job, but I am a trader. I'm not an analyst. So when I'm doing it from the eyes of a trader. So I see risk before I see profit. A real trader, and there are not many, will see risk before it starts seeing profit. Because if you've lost your account once or twice, etc., you at a certain point you understand that in fact it's not about the money that you can make, or it's not about the analysis that you are doing. That this is not the problem. The problem is about when you lose. when you lose big, and when you lose big, you can't, you know, like it gets harder and harder, you know, like to start over. So this is important. Anyways, I just want to show you a very quick and very easy analysis that you can do and that you can apply and that you can learn. Okay, and this is something I've learned, you know, like in a book from a successful trader. Okay, someone that has been trading for 40 years and he's using this technique. So the technique is very easy. I will show you. And it's a very old technique, but it's an old technique and it works. Anyways, if it works, why not use it? Okay, here is when after an up move, when you have, you know, like price, you know, like correcting and then making a new high in the correction, I mean this one that follows, what you should look for. You should look for price to break this low. Okay, you should look for price breaking this low, and when it breaks this low, you should look for your first correction or corrective move to enter the market, and then to wait for price to come to this high. Okay, to come back to this high. This kind of trading or this kind of strategy gives you a very small risk, I mean very small exposure and risk compared to reward. So you can have, you know, like a risk that is really small compared to a reward that is many times, several times over the risk. Okay, so when do we when does, you know, like this, I mean this chart pattern becomes, when does it become invalid? It becomes invalid as soon as we tag this low, so this second low. Okay, so as soon as we tag that low, we have a change in market structure, and then we have to look for other, you know, like hints in our chart to be able to decide what to do. Okay, so here this low should be, even if price comes, you know, like very close to the low, as long as it doesn't touch it, or as long as it doesn't go, you know, like just 1 pip or, you know, like just 1 cent, you know, like below it, this structure is still valid, and price is still and the structure of price going back and retesting this high is still valid. Of course, you can even keep your trade even after, you know, like it tags this high. Why? Because usually a price would go, you know, like above this level. You know, like in probability wise, it will go above that level. Okay, so that's it. Okay, so as I said, if you didn't subscribe yet, please subscribe, and you'll have lots of videos, you know, like in the coming you know, like in the coming days, etc., and weeks. So I just have to say something that is very important, is that you can go and look at, you know, like my previous videos. You'll find that lots of videos have been right and have been to the pip. I mean, the precision of these videos would blow your mind. And I've been also, you know, like I'm not even doing this, you know, like for a long time, but I found out doing these videos that in fact I was doing it unconsciously. Every time I was trying to trade or to take a trade, I was doing my analysis like on my live chart of my live trading chart. So I was doing it, you know, like every time, you know, like when I was trading. But what you have to understand is that, you know, like you'll see the videos, and you'll understand that, you know, like I am not a bullshitter, and I'm not someone that is just pretending doing this, etc. You know, like I'm not fancy. I'm a very normal person. I'm not fancy at all, because I'm a real trader, and I'm even a little bit introvert. So I'm just doing it because I love trading, because I'm a technical person, because I'm an engineer, because I love I love everything related to technology, to data, etc. So I'm a data driven person, and I love to prove what I say. That's why my videos are so, like precise when it comes, like to show you what might happen in the market. Also, I try to read charts, like from left to right, and I don't, and I hate it when I see people just, like taking random levels and trying, like to make something out of them. Price, like has moved for some time, and there is something called the market history. I mean, the history. I mean, market memory. And what does it mean? It means that, like market players or whatever, the market remembers some level and remembers some kind of moves. So if price tag the level, it's important to know what it will do in the future, depending on or based on what it has done before. Okay. So you have a good night, and I will be back tomorrow with more videos.